Okay. Oh, one more thing I need to do. Just give me 1 second. Okay, lovely. Welcome, everyone. And thank you for making now time to be here. So we're going to look at mastering the Fibonacci tool. And we're going to see how this helps us in doing our analysis. Okay, so get your questions ready once we are close to the time for questions and answers. All right, so let's go. I want to send a note to the people on the platform that we're live so they can join. I think we're good to go now. So welcome to today's webinar. And I'm really excited that we are using another tool today. In fact, some people call it a very powerful tool that traders use for identifying potential price levels where markets is likely to turn. So whether you're new to Fibonacci or looking to just refine your skills, this session will really be one that will take you through those steps that you need to help fine-tune your skills. So, an overview of Fibonacci. What is Fibonacci? Fibonacci has its origins in nature. Okay, is a sequence of a series of numbers. So you have 0, 1, 2, 3, 5, 8, 13, 21, and it goes on and on and on and on and on like that. If you look at nature, maybe some flowers, you see how they are designed. Those who are into plants, when they analyze it for you, they will tell you that they follow the Fibonacci sequence. So Fibonacci retracement tool is based on key levels derived from these sequences. And these levels are believed to be, they are believed to reflect the potential points where markets may experience strong supports or strong resistance, and therefore it will turn once it gets to that level. Now, some of the typical levels that we have are the 23.6, the 38.2, the 50. Now, as I say, 50 is not really part of the sequence, but 50 level is like halfway through the levels you are taking. So when we go to the chart, you will see it properly there. So the next one is 61.8, the 78.6. Now, you don't have to take all these levels. However, once you start using it, you will see some levels that you are that you like more. So, for instance, some people like the 50 level, some like the 61.8, some like the 78.6. So you just decide what is good for you. Okay, so let's move on. Now you may wonder, why do these numbers seem to show up so often in the markets? Is because, okay, we mentioned this earlier, that that the Fibonacci sequence and its derived levels are deeply ingrained in nature, in art, and even in human psyche. So from the spiritual shell to the structure of flowers, Fibonacci patterns are often found in natural phenomena. Okay, let's move on. So how do we apply this? That is where we're going to. How do I apply this to the chart? So let's walk through it step by step. We'll look at the simple example so that we can understand this application. So you select so I'll just go through this theory part first, and then we'll go to the charts. So you select your tool. So whether it's on TradingView or MetaTrader or any other platform that you're using, usually this Fibonacci retracement tool is available on those platforms. Okay. So once you select the tool, you then need to identify the significant price move that you want to analyze. So once you take the tool, you then identify your swing high and your swing low. I use what we call the fractals. If I want to if I'm not able to see it with my eyes, in fact, you will see with your eyes. There's no way you'll see it with your eyes. However, to help you to aid in knowing where your last swing and your recent swing, where they are, you can use the fractals. We'll see all that when we go to the charts. Okay. Then once you plot once you put the Fibonacci tool there, those levels then come up. You just see them. Okay, and then you can use them as possible turning points. Okay, so as it says here, traders often use the Fibonacci retracement tool and their levels as potential entries. So for instance, in an uptrend, if price retraces, so we want to see the price pull back after a push up to maybe a 23.6, any of those levels, 38.2, 50 level, or 618.8. What's that number now? Oh, just a sec. Those numbers are 61.8 or the 78.6. You know, those numbers are not, you don't have to be rigid with them. Okay, you can configure it, and I'll show you how to do that. Okay, and usually the exit points are either the 1-for-1 level. So you are risking, let's say, if it's at the 50 level, for instance, you're just looking for the 0 level. Okay, so let me see if we can go to the chart before we come to the pitfalls. Okay, so this is, okay, I put this one here earlier. Let me remove this one and expand this. So the tool is somewhere. Where is my tool? Okay, on my charts, I just moved it to the side, to the left here. You can see where my cursor is. So once I press on it, if I do this, you can see all those various levels. You can see let me show you this. This is 100 or 0 level. Okay, I can call it a 0 level, and you see the reason why. This is 50. This is 50 level. So if you look at between here and here, this is the halfway point, right? This one, it says, is the 618.8. 61.8 level, and this is the 78.6 level. Okay, so all we're doing is that we're going to mark out. Well, first of all, let's see how to configure these. So you see your tool there. Can I expand this? No, it's not expandable. Okay, so I have 0 level. I have the 50 level. I have this. This is the 1. Then the 100. I call it the 100 or the 0 level. I have the 718.6. Why do I call it 71.8? It's 78.6, and then the 61.8 level. Okay, so these are the typical levels that come to you when you open your chart. Okay, I'm going to send us this document or attach it to the replay this has all those normal fib levels. So it has your 23.6, 28, 38, 38.2 level. You see your 50 level, your 61.8 level. So this one will work on your MT4, these levels. It will also work, you can also put it on your MT5. We'll see later what we have for trading view. Okay, so this is one type of marking those levels. So all you need to do, the numbers on this side is what you will put on. Let me bring this one up again. And then we'll bring the, okay. So the numbers here, these are the levels. Okay, so you put that there under level. So for instance, if I want to add a level, I can do this. Let me see which number is not there. Okay, let me use, okay, let's say this one here. So I put that level there. And then I just copy this whole thing here where it says description, which goes under description here. So I just copy this description. These numbers, these figures here, they are the ones that show you the price level when you go to the chart. So you can see on this chart here, you can see these numbers here. That's where the price level is at this 50 level here. So if I move this Fibonacci tool now, if I move it down, it will show, it will also, those numbers will also move down. Okay, so let's do that bit that we want to do under description. We'll add this. Oh, it didn't copy it completely. Let me do that now. Okay, and then when I add it, okay, so it comes to this side. Okay, so this is the 14.6. So what this particular tool has done here is that it's starting from here, the zero level here, and then it's counting upwards. So from zero here to 100% here. Okay, but don't mind that. What we'll do is to renumber it and see where it comes to. So let's go back to that fib. You see why I have it this way, so that you can do it yourself as well. So instead of doing 14.6 there, what I can do is to just put 85.4. Okay, so that's the converse or the inverse of what we have up here. Where is my tool here? Okay, so I want this number to be up, somewhere up there. So if I want it to be up here, that means instead of counting 14% here, I want it to be 85 point something there. That will be 85.4. Okay, I hope you are following these numbers. So I'll put 0.854. Okay, and if I click OK there, so you see where the numbers go. So that means if I'm looking at my chart and saying that price is pulling back from this level here, from the top here, that price is pulling back, then once it pulls back to this level, it's just done a 14% retracement. Okay, so let's go this way. So we said that for us to put the fib, once we bring it up, So let me close this one and then bring in another one. So we said we want to mark our swing highs and our swing lows first. So in this uptrend here, this you can clearly see that between here and this level, price is moving up. Okay, so we want to now mark those levels. So if we just came here from the beginning here, we see price move from the low here to this top here, and then it had a retracement here. So once it gets to this top here, we can start our Fibonacci tool from that top there and just push it down this way. Okay, to the lows there. So this will be our levels. Okay, this will be our 50% level. This will be our 618.8. This will be our 78.8 level, or 78.6 level rather. Okay, and then that will be where, if price gets there, we'll put our stop loss just below there. If price comes there, then we are no longer interested in the trade. Okay, so assuming you've just seen price move from here up to this level here, and then you put your Fibonacci tool. So you are ready to enter your buy from there. You put your stop loss there. Okay, so you put it there. So one way of putting it is to put a pending order right here. So you don't know what price is going to do, but you just put your pending order there, expecting that price is going to move up. Okay, and the reason why you are thinking that price is likely to go up is because you have seen price move from this low here all the way to this top here, breaking this initial structure here. Okay, so you've seen it break the structure, and then you say, okay, once I see a break of structure, I expect a pullback, and I don't expect this pullback to go all the way down. I expect this level here to hold. Okay, so let's move a bit faster now. So I then place my trade, say at the 50% level, or at the 618.8 level. Okay, or I put it there, or maybe I even put it at the 78.6 level. Then my first profit target will be these highs here. Okay, and then the next ones will be up there and up there and up there. So on my own particular configuration here, I don't have them. I removed it because I've not been using the fibs that often anymore. I don't need them. But when you do it, just put all these other numbers and it will put it there for you. Okay. Let me see which ones we can use. Let me use this. I hope this will work, so that you can see what I'm talking about. So I want to add a number. Oops. Oh, let me copy that and then paste in here. It's not pasting, imagine. Okay, let me do that one more time. I copy, I come in here and paste. Oh, wow, okay. Let me do it manually then. So it's minus 0.382. Minus 0.382. And the number there is what? 138.2. Let's see. Okay, that other one what? Okay, let's see what it gives us. Oh, okay, this one does it the other way. Okay, let's do it this way then. Right, so if I've just flipped it the other way now. I've just flipped the Fibonacci tool so that I'll have my 138.2 level up here. Okay. So once you see the tool, you know, you get used to it. but just need to just practice and practice and see how those numbers fit your own levels. So I've just put the 138.2 level there. Okay, so my 50 level is still here. My 61. Oh, okay, those 618 and okay, I see why I didn't put those ones there now. You see, it flips those numbers. So that's why I removed those other numbers. Okay, it doesn't matter. By the time you use the tool and you put in all these numbers, you'll be able to. I don't have the time right now to put it because I'm on my laptop battery, so it might go off in another 10 minutes or so. So that's why I'm trying to just hurry up and just tell us what we need to do on that before I go to my phone. Okay, so just put in these numbers, and then you see how it comes out on the Fib tool. The numbers at the top here is for, this is a totally different thing. Is for when you want to use it to know what your profit levels are. So it's a totally different thing. So you can test that later for yourself. But let's remove that that other bit that was there before. Oops. I want to remove the 138 level that I put in now, so that we can see. In fact, I can even remove the 14 level too. Okay. So I'm only using this first default ones here. Okay, so what we said we'll do. Okay, so we have this is the first set of trades now. So once it reaches this level, that's fine. We can leave the remaining trades to just run. Okay, now let's see between here. So what price has done again now? So after it moved from here to here, it pulled back, came back up, pulled back a bit, and went up again. So on this push here, between here and here, let's see if we can get another Fibonacci level for that. So all we do is take our Fib level tool and then put it in between those levels. Now, you can see price did not come down to 50 level, but it's probably like 38.6. That level there, about 38%, somewhere there, or maybe the 23.6. Okay, so this one is a shallow retracement. Remember, it didn't do like these other ones that came all the way down. So you will get that as well in some instances. Okay, let's do another set here. So we see that price pushed again from this high here, came back down, pushed up, right? Then went sideways a bit, then pushed up again. Okay, so what you then be doing is that you'll be looking at the price action and say to yourself that, okay, price has reached here. By the time you put your tool between this high and that last low there, okay, you see price did not come all the way to 50 level, but it will have picked up the 23 point something level there. Okay, or the 38 possibly. And then your first target is right here at the top, this last high. And then if it goes further, that's fine. Okay. Now, by the time, if it doesn't pick your level, and then this candle here forms, just move your Fib level to the top there. And this is still your low. Okay. And then you see price comes down and triggers the 50 level here. Okay. And then from there, you can see it move. And then you can do another one here. And you see the price comes to 50 level, even the 61.8 level, and then it moves further. So generally speaking, that is how your fib levels work. Okay. One of the things you need to remember is that we don't want to use the Fibonacci level just on its own like that. It has to be within the context of your trader strategy. It has to be within that context. If not, just using it by itself, it may not be as effective. Okay. And then you must not ignore price action. Okay. Pay attention to price action, your candlestick patterns, engulfing candles, kangaroo tails, and what's the other one now? Dojis. Okay. And then, of course, now just to recap, we said that there are some levels on the fib levels on the fib tool, 23.6, 28.2, and so on and so on. Those are the levels that many traders look at. Now, to plot the fib level, we say we should take the last swing or the recent swing high and the recent swing low. So if you're doing it for a sell as well, you do the same type of setup as well. Okay. Then you have to avoid over trading. Okay. So this person, this note here, I just said you can use it with other indicators. So some, for instance, may use it with MACD or RSI or things like that. But if that is not in your trader strategy, you don't need to use it. Okay. Okay. So do we have questions? Or are we good? Do we have any questions?
I'm fine, thanks.
Oh, good. Billionaire Hamda, do you have any questions? Okay, so let me just switch to the my phone so that we can look at the trading view here. Let me see. Share screen. Okay. So on the trading view, where is my chart? Okay. Trading view, where's my toolbox? Sorry, let me just bring that up first. Okay, it's under, you can see fib retracement there. And I've highlighted it so that it will be one of the favorites that comes up there. So let's look at let me take the, I want to change the pair. Let's go to pound USD. Let's do that 1 hour again. Can I clear the levels there? Okay. So we see a similar thing here. So if we have this level here and we pick this level here, let me go to settings so you can see what I have on the fib levels here. I don't know if you can see this one. Can you see the screen?
Yes.
Okay, good. So those are the levels I have. I have the 0.382, 0.618, the 1, 2, before, and then on this other side, I have 0.26, 236, 0.5, and 1.618. Okay. So if we look at this trade here, we see that price moved from the lows here to the top there, pulled back a bit, and then went up. So all we're looking for is for an area that we can use as our fib retracement level. So, and you can see very nicely how price came down to this level, and then from here it then went up again. Okay, so basically I'm just looking for that wave, how the market moves in waves, and then you just want to capture the high and the low, and then put your fib level there. Once you put it there, you can then trust that price will retrace to one of those levels and then possibly just move up. So it's just a potential setup for us when we use the full fib levels. Okay. That's all I'll do with this one. Do we have any other questions? Okay, so if we don't have any other questions, I think we can call it a day.
Thank you.
Thank you also very much. I'll upload it and share the link later once it's done converting it.
Okay, brilliant. Thanks so much.
Good. For those of us on the coaching program, we'll meet tomorrow and then we'll do our valid ranges.
Oh, brilliant.
Thank you very
Okay.
much.
Thank you. Bye.
Okay, bye.